And for more insight into the Chinese economy, we're joined by Sung Won Sohn. He's Professor of Economics at California State University. Thank you for joining us.
Thank you.
Now, Chinese stock markets continue to tumble on Monday. So what would you say are some of the key factors at play?
Investors are worried. First of all, China's economy is slowing down. On top of that, of course, we've seen quite a bit of volatility in the currency markets. So I think this uncertainty is one of the main reasons why the market did go down. But as market stabilizes, as it seems to, I assume that the stock market will stabilize as well.
Now, unlike some stock markets like the US, China's markets aren't a direct reflection of the health of its economy. So what do you see as the most pressing issues that are affecting the Chinese economy?
The Chinese economy is slowing in part because investments are slowing. In the past 10 years or so, economy grew rapidly, as you know, because of massive investments in properties and in infrastructure. That is slowing down, and that is being offset by increases in consumption in the new economy. So one segment is slowing down, and the other segment, the consumption, recreation, health, education, etc., that is beginning to pick up some steam, and that is taking some time. Also, if we look at the property sector, the auto sales, the consumer spending, that is beginning to stabilize and then begin to do better. So I think we are in a transition period, and then so we should not expect a significant change right now. On balance, what I'm saying is that overall economic growth is slowing, and that is not all that bad. I think as long as we get it to slow on an orderly basis, I think that is what we want.
Now, you mentioned the auto market and also the property market as the potential for having to be key drivers. Do you see them still being the key drivers, or are there other sectors that are standing out to you that might also help boost growth?
Autos and property, these are very important segments of the consumption sector. Since consumption is supposed to lead the economy, we need to really look at the autos and property. If we look at those sectors one at a time, auto sales toward the end of last year did very well, primarily because of tax incentives provided by the government, especially for small cars. And so once those tax incentives are taken away, auto sales would slow somewhat. But we are seeing more jobs and economy growing, and there's a pent-up demand for cars in the long run. Therefore, I think that will be a significant engine. In the property sector, also, we've seen very low interest rates and easier mortgage policies by the government have encouraged the property sector. So I think in large cities, we are beginning to see property prices going up, and then that too will become an important part of the Chinese economic growth. When you talk about housing properties, there are a lot of things that go into it. When you build a house, a building, think of all the things that you put into the building: glasses, cement, wallpapers, furniture. So that is a significant portion of economic growth, especially consumption.
Now, obviously, what has been making headlines, the yuan depreciating to better reflect the market value, and with that is coming weakening concerns. How do you see that impacting financial market stability?
Well, I think we all expect the yuan to depreciate. The important thing is that we want it to depreciate on an orderly basis. After all, the U.S. economy is appreciating, growing, and the Chinese economy is slowing. As a result, its economic theory would indicate that we should see yuan depreciating and the dollar appreciating. Fortunately, the authorities have decided to peg renminbi yuan to a basket of currencies, and the basket is depreciating. So I think we should see a slow, orderly depreciation. Now, when we do have some volatility like we had in the last week or so, that is a problem. But hopefully in the future, the government authorities will be more careful about what they say, how they say it, and better coordinate their policies so that we would not see the kind of volatilities that we've seen in the past. But I think we will see gradual, slow depreciation of the yuan, and I think that's good for the economy, good for the market.
And as we look ahead at the health of the Chinese economy, the OECD is saying the slowdown may be set to end later this year and avoid a hard landing. Is this also how you see things shaping up for China this year, and also looking ahead to the next 5 years?
Well, yeah, I think so. If you look at the China's economy, first of all, we are seeing more liquidity put into the economy by the People's Bank of China, and we are seeing a lot of fiscal stimulus like infrastructure projects, so that the government policies are stimulative, and then that will bear fruits, especially during the second half of the year. On top of that, we are seeing, as we pointed out, the consumption, including autos and properties and education, healthcare, all these things kicking in. It is taking some time, but when you put them all this together, I do expect the Chinese economy to pick up some steam during the second half of this year.
Well, we'll have to leave it there, I'm sorry, but thank you so much for joining us. Great insights there. Sung Won Sohn, Professor of Economics at California State University.